Joining us at Post 9 this morning, Lerer Hippeau, managing partner Ben Lerer is with us. It's great to have you back, Ben.
Thank you.
So
Happy to be here.
How did you resist the forces that were saying get out late last week?
It's been a long weekend, a long week. I think, look, SVB has been an incredible partner to the VC ecosystem for a long time, and I think there are arguments against some of the things that happened there, but generally we've been really, really happy for their partnership. I think keeping all of your money with any bank now feels crazy. Admittedly, on our sort of 2023 bingo card, SVB's failure was not one of the items that we were expecting, but we want them to survive. We want them to continue to exist. And so while keeping all of your money with them or frankly any bank, is not something that we advise, we don't want everybody running away because we want a buyer to come in and try to keep them in the ecosystem.
Right. But you're not going to you're not going to diversify your deposits into 50 banks.
No. Into a few banks, I think you need to have you need to have backups. I think a bunch of companies were not thinking about treasury and a bunch of funds in really smart ways. And so you had companies that had raised $100, $200 million with the overwhelming majority of that sitting not even in money markets, but just in cash with a single bank. And while I don't think it's companies' responsibilities to sort of make sure, like confirm that their bank has a strong balance sheet and that deposits should be guaranteed at major banks in the U.S., we live in a new world now.
Can you talk about, and Ben, I know this was a huge issue for you and you had a hellish weekend. Can you talk about how critical Silicon Valley Bank was to Silicon Valley, to the startup ecosystem and venture capital, and what its demise is going to mean?
Yeah, I think that's still, we're still sort of working through exactly what that looks like. There's a bunch of different roles that Silicon Valley Bank played. One of them was that they were a big debt provider. And I think that there are certain companies that should have had debt with them, probably lots of companies that had debt with them that should have had debt with them. I think there was another group of companies that probably were using debt in not particularly intelligent ways. We're sort of using debt to extend runway and living off of debt. That's not a good practice for companies. It's something that we've been advising against for a long time, but it doesn't mean that it wasn't something that was going on in the ecosystem. So it'll probably be harder for companies to go and get certain kinds of companies to get debt. I think even companies that are strong and are using debt for the right reasons will probably have more expensive debt for some period of time, maybe a very long period of time. There's also, Silicon Valley Bank played a role as a connector. They played a role as a data provider. They had unbelievable benchmarking data around what Series A valuations were, around what, ARR was required for Series Bs. And a lot of the ecosystem used that data to help understand pricing, to help navigate some of their strategies. We will live on without it, but we're going to miss them for more than just cheap debt. And I think that that's something that people are missing.
The knock is that everything you just said and that tight interconnectedness fed groupthink, right?
Yes.
And
yes.
I assume you think that's broken now.
I do think that that's broken now. I think that, again, the run, by the way, in some interesting way, it's almost self-inflicted because one of SVB's great strengths is that they had better interfaces. They had a better digital platform than every other bank. They made it easier to move money. And so, you go back to 2008, people are waiting online in the street. It takes weeks to do anything. You look now, people with one click can get everything out of SVB. And I think that there was this panic moment that no one is singularly responsible for. There's not one VC that started a run. Everyone got nervous. Everybody got nervous.
Well, there was one person who exacerbated it.
Look, I think that in general, I think a lot of people were nervous and freaking out. The advice that we gave founders was, we're not going to sit here and tell you to pull. There's questionable legality around sort of like starting a bank run. Like, we're not going to play that role, but we're also not going to say, you leave every penny there. What we said was, this is your decision. You are the fiduciary. This is your company. In almost every case, you control your board. You need to do what you think is right. We don't condone a bank run, but we also know that you need to do what's right for you. I think a lot of other funds behave the same way that we did.